The Shep Familia is so big, so vast, and we cover all of the United States, which is always the exciting thing for me to know that I've got friends and family all over. Okay, Sonia, you're in Connecticut. Nice. Is it already warm in Connecticut?
It is,
Okay.
let's see, 82 degrees. Going through a real bad thunderstorm right now. So anyone in the East Coast, I'm sure you guys are probably going through that as well. New York, New Jersey for sure.
Yes, yeah. We've had a lot of rain down in Tampa. Last night was probably 2 hours of just drenching downpour from the heavens. It was delightful and, like it took me a while to get home at the same time. So I think the rains are just moving north now and you're catching them.
Oh yes, I had to leave 2 hours beforehand because I was like, I am not going through rush hour, especially if it's going to be raining, because people drive reckless. I don't know why they would like to drive reckless during a rainstorm. Like, how can
I
people?
don't know. I don't know. All right. Welcome, Abel from Texas, but now in Louisiana. Okay. My daughter goes to school at LSU, so I'm familiar with Louisiana now. Well, we'll go ahead and get started. I'm sure more will be joining, but we have a nice group here. Welcome to Ship and Entrepreneurship. This particular, hey, Denver and Pennsylvania. See, y'all keep joining. I'm excited to have you here. Um, we are in the session for navigating taxes, which is a very interesting topic. Well, I mean, I'm I'm in good company. We're all on the nerd side of the spectrum. And so talking about taxes is actually fun, and especially fun and interesting when you're doing it early on in the process. So welcome, you're here in good company and at the right time. This is a great day to be here. I'm trying to figure out how I go up in slides. Post
Sonia, you wanna
to.
you wanna go ahead and go to the next slide for
Yep.
Francesca, and then Francesca, you can just tell her when you want to advance.
Okay, perfect.
Okay, no problem. Thank you. All right. So I am Francesca. I am your moderator today. I am on the National Board of Directors for the organization, and I'm pushing entrepreneurship, not pushing, but advocating on behalf of entrepreneurship at the national level. We have now included that in our strategic plan, which is very exciting that the organization you can expect will be dedicating resources, both human, financial, programmatic, all of that. And you'll see this growing over the next few years. Definitely very, very excited. My
Next
own
slide.
journey, yeah, my own journey is I consider myself a multi-career professional and a serial entrepreneur. Some people might say I don't know who I want to be when I grow up, and I say I want to be a lot of things when I grow up. My first venture was building software to track the performance of aircraft engines. If you can go back, thank you. I began my career with GE, but I have moved on to do a lot of consulting and leading a lot of implementations for government agencies and for um, nonprofit as well as for-profit entities. I'm a speaker as well, and my most current endeavor in the entrepreneurship world is opening an art gallery. So to me, that's super exciting. I get to do different things and play in different arenas and have a good time with that. If we can move on. Okay, so getting the most out of this session. It's always best if you can have your camera on. It's not a requirement, but It makes it more engaging and more interactive. And honestly, I like seeing people's faces. I'm sure Sonia will enjoy seeing who you are. And, if you're having a question or something, that'll be great. Mute your mic unless you are speaking. If you're like me and you have a dog at home, they will join the. See, my dog is already saying hello and all the things. So mute your mic unless you're speaking. Engage in the chat. You can start asking questions and go from there. It'll be a lot of fun. To have the two things happening in parallel, especially if you have questions that we can incorporate. And then don't forget, give us your feedback in our closing survey. Your feedback is going to help us improve what we're doing and make it better in future events. My dog might say hello any moment now, but ignore her. Next slide. Okay, so these QR codes are important. We want to make sure that you are part of the community. The community is right now three different things or ways for you to engage. One is our LinkedIn group. You can join that. You can continue the conversation there when this workshop is over. So make sure that you go ahead and sign up for that. Our virtual event programming, like what you're seeing here, is another way for you to engage on a regular basis. So you want to sign up so you can get the notices of the next things coming up. And obviously, our national convention is a perfect place to meet in person. We host a community gathering there as well as some workshops. So we're in the midst of getting ready for Indiana 2026 in the fall. Susan just posted the link to the group as well for LinkedIn in the chat. So go ahead and click on that. If there are any questions on how to engage with SHIP and becoming part of the committee, please put that in the chat as well. We are always welcoming people who have the background or have the interest to be part of the community's leadership. Okay, next slide.
Oh, sorry. I don't know why.
Oh, no problem.
Let's see. Oh, why is it? Oh, okay.
All right. So don't miss it. June 10th is our next cafecito with Abby Bravo in Pathful. So mark that in your calendars. And then June 23rd is Am I Ready with Rebecca Clyde, the CEO of Botcoin.ai. You can RSVP right now using the QR code in your screen. And if you want to be a speaker in this series of cafecitos, then you can use the QR code on the left to do that. So I'll give you a moment. You can either take a picture or do what you need to do, and then we can keep going. Make sure you don't miss the next two virtual programs coming up. All right. I want to introduce you to our superstar for the day. This is Sonia Castellan. Her LinkedIn, Instagram, email, and website are right here. So take a picture and you can refer to it later on. But she is a first generation Latinx tax pro, founder of Castellan Tax Services. So she fits right in with the Chef Familia. She has a background in sociology and over 7 years of corporate experience before she transitioned into accounting. She understands how intimidating taxes can be. And she was never taught how money really works. So she is one of those first gen and BIPOC entrepreneurs that really feels what we're going through as the same. She's especially passionate about demystifying the back end of the business upkeeping, things like bookkeeping, compliance, structure, tax planning, etc., so that her clients can operate with clarity rather than confusion. If you guys hear the tweaky, that is my dog being entertained. Don't worry about it. It'll end in 3 minutes when I pass it over to Sonia. Her work goes far beyond tax preparation. Sonia helps inspire entrepreneurs. And let me tell you, the right tax accountant is going to do that for you. She understands your numbers. She can help you legally reduce tax liability, keyword being legally. She helps you build clear financial systems, and it helps you be a more confident and informed decision maker year round. So, with that, I want Sonia to take the wheel and lead us through.
Thank you so much, Francesca, for the introduction. And I'm so excited to just speak with you all today because I'm sure you guys are all curious about how taxes work, what you can implement in your current situation, especially if you are thinking about entrepreneurship or are already in the space, but just need a little bit more clarity and guidance to ensure that you are guided in the right direction. And as Francesca mentioned earlier, that there's a lot of tax professionals out there who are very knowledgeable. But if you are someone who is not understanding how it works or not giving much clarity, then you're probably working with the wrong professional. And you always want to make sure that you have a really good strategic partner by your side because being an entrepreneur, there is a lot of decision making, and you want to make sure that you are given the necessary knowledge and resources to make sure that you are doing things correctly again and you are understanding it because there is a lot of misconceptions out there and there's a lot of mistakes that a lot of folks make, and that's because they weren't given a lot of clarity when it comes to their tax situation. So I do appreciate you all being here today. And for those who are in the East Coast, I am just so thankful that you guys are even dedicating your dinner time to just tune in with me. And for the rest, I again appreciate you all just tuning in. But I definitely wanted to just kind of go over the agenda and just kind of break down like what we're going to be discussing in this session. So we're definitely going to be talking about business structures. We're going to discuss about the basic that every entrepreneur should know, as well as some of the strategies that you can implement for your situation. And then just kind of go over the tax essentials, right? Especially if you are receiving 1099 income. And then we're going to briefly discuss about any deductions and losses that you are eligible, right, to take as a business owner. We're also going to be going through some common mistakes to avoid. And if it's okay if you already done them, it's okay because this stuff is fixable for the most part. We're also going to be touching on just a little bit about the startups for those who are curious about how startup businesses work and how it should be set up accordingly. And then for my entrepreneurs who are ITIN holders, I did not forget about you guys. So we will be talking a little bit about what you guys should be considering or should be looking out for when it comes to you stepping into the entrepreneur world. So with that, we're going to go and jump right into the first big topics, right? Like, especially like when it comes to the business side and the tax side of things. So one of the biggest mistakes that I see, even till this day as entrepreneurs, is that when they are going through the setup of the business entity and trying to figure out how to be taxed, right? One of the things that I have seen though is that they're already mixing personal and business finances. Another one that I have seen is that they're not tracking their expenses early on, or they don't have any bookkeeping or financial systems in place. A lot of folks, even just as we just wrapped up the tax season last month, a lot of folks waited till tax season to organize everything. And I have seen a lot when it came to even just the business formation side. A lot of people thought that they had registered their business with the state correctly. And then upon reviewing deeper into how the paperwork was set up, is that they either set it up incorrectly in terms of the type a business entity they should be set up or how they should be taxed as well. And then obviously the biggest of all is that a lot of them who did really well in their business and had generated a significant amount in net profit is that they didn't set aside money for those taxes. So we're definitely going to discuss a little bit more in depth about it, but I will say for sure as well is that when it comes to even setting up your business, especially when you're trying to register for a limited liability company, also known as an LLC, is that they tend to rush through TikTok, through Instagram, through YouTube, thinking that what they're seeing is correct, but it's not. And that is my ongoing battle that I have right now is that we have a lot of content creators who obviously have a really big community. They have a big audience. And unfortunately, they're not licensed tax professionals, but they're out there trying to give out tax advice. Now, what they may be stating out there may work out for them, but may not work out for others. And this is why I am trying my very best to this day to remind folks, listen, where you are at, especially on the business side, you are probably nowhere near where these other folks online are at. It could be that they're doing so well that that's why they are setting up their business in a certain way and why they are eligible to take some of these additional deductions because they're doing so well in the business. Now, others, it may be that they're just doing it for clout. They're just because they're seeing a trend out there that they're going to be relaying the same information to the folks as well. But just know that when you are setting up your business, the structure that you build, it has to support your business goals, okay? It cannot be one of those social media trends that you are seeing. It has to make sense. And we'll go into it more in depth in a bit in the next few slides. But I want to just make sure that you guys understand that what you do see, just do not compare your situation to what you're seeing online because they could be doing it either illegally or they may be doing it legally, but they're just at a different stage in their entrepreneurship. But yeah, we're going to move on to the next slide, which is, do you even need a business entity, right? Because I get that a lot from my clients, especially because a lot of people think that, well, for example, like let's say I just had a client actually not too long ago. She stated like, listen, I don't have an LLC yet, so I don't have a business. But yet I am generating all this income from doing she does what is it? UC, is it UC? No, UX. I believe it's like a web design stuff. And she was telling them that she has been hired to develop these websites and do all the design, but she is not an LLC yet. And I told her, listen, even though you do not have a legally registered business with the state, from the IRS perspective, by default, you are operating as a sole proprietor. And how you are generating this income is considered a business activity. So while even though you are already starting to make money, just know that it does not matter whether you have an LLC or not, because an LLC is more of a protection tool, okay? It is not a permission to start. It is a protection tool because you are letting the state know that you are now want to register as a limited liability company and that you are going to be following the rules when you set up the business formation with the state. But just know, we'll go more into that in depth in the next few slides. But just know that if you are receiving any 1099 income, okay, whether you are freelancing, you're coaching, you're doing consulting, you're doing digital services, photography, a design work, whatever it may be, right? The IRS already seeing you as operating as a business, okay? So some of the business structures that I wanted to go over is these four things. And I'm trying to simplify this so that I'm not overwhelming you because I'm not just letting you know, I am a licensed tax professional, but I am not a business attorney when it comes to this. So anything that you guys have in relations to that, I'll try my very best in my ability to answer those questions that you may have. But anything that's more on the complex side, I will let you know whether you should be reaching out or having a discussion with an attorney who specializes in business formation. But first things first, I definitely wanted to just go over sole proprietorship. As I mentioned in the previous slide, right? Sole proprietorship means that you do not have an LLC, but you're letting pretty much the IRS and the state know that you have generated or are receiving income, but there is no separations between you and the business legally. Okay. A partnership is when you have multiple people who own the business together. An LLC, again, gives you a liability protection and flexibility. And I'm going to put a pin on this for a moment because I'm going to be talking about this in the next slide about the LLC. An S Corp or C Corp, okay? I'm going to make this really loud and clear. It is not a, what do you call it? A business formation per se. It is a tax election, meaning that you are asking permission from the IRS as well as the state, because there are some states that you do have to ask to be an S or C Corp. You're asking permission to have this be taxed for your business so that you can take on the benefits of those additional tax savings. And this only occurs, and usually where I would suggest, depending on where you are in income level wise, if it makes sense for you to be filing as a C or an S Corp, because filing one of these entities can become very expensive. So I'll give you a brief overview of what S Corp and C Corp are, because they are different. So an S Corp, it's going to help reduce your self-employment taxes once the business is profitable, meaning that it has to become very high enough for you to even qualify for the S Corp. So this only makes sense if the income that you are generating for the business is going to support the extra costs that you are incurring, as well as any administrative work or employees that you are adding to the business. A C Corp is more common for startups who are actually seeking investors to invest in their company, or they're already venture-backed companies who already have people involved into their business. And then C Corp also gives an opportunity for companies to issue out any stocks, right? For example, like restricted stock units, also known as RSUs. So those are the difference between an S Corp and C Corp. And what I see a lot, right, especially now with the ongoing social media trend, right, is like when you set up an LLC, you have to automatically apply for mostly the S Corp, because that's the popular tax entity that I see that a lot of folks are trying to push forward. Just know that, again, that if the business is already generating enough profit, and usually to me, the golden rule for me and my firm is that if the business is already making $75,000 net profit, then it makes more sense to be filing as an S Corp because of the tax savings. But if you're not already generating that profit, then makes no financial sense for you to be set up that way, because already filing as an S Corp or even a C Corp is going to be very expensive, because you have to be on payroll. Then you have to make sure that if you do have leftovers from your net profit, what you should be distributing to shareholders. So again, it gets really, really dicey. But I won't go much into it in details because it does get a little bit more complex. But I do want to let you know that, at least from what I know that makes financial sense, is that we got to make sure that if you want to file as an S or C corp, we got to see if you meet that income level, especially because, again, we got to factor in everything that you have incurred into the business, and then if it makes financial sense. Because the last thing you want to do as a business owner, right, is to bleed money. As entrepreneurs, you build a business to make money, right? That is your end goal, is to make money at the end of the day. So if this is something that you do plan on doing, especially if you're trying to leave your 9-to-5 job or any type of W-2 income and you want to go all into the business, it just has to make financial sense, because if you're going to go all into the business, you got to make sure that you feel financially comfortable doing so. And then as a business owner, you want to make sure that you're paying yourself as well and that you live comfortable with that. But yeah, long story short, right? We got to make sure that the business structure that you are setting up is going to match with your current stage of the business, okay? So just letting you know, you do not need to be an S Corp immediately. And for some folks, you don't even need to be an LLC right away, okay? Even sometimes filing is just as a sole proprietor is the best starter point. Now, what people get wrong though about the LLC, okay? I will tell you right off the bat that having an LLC does not automatically lower your tax bill, okay? It will not. Forming an LLC will not create any tax saving. It is the main purpose of this LLC is, again, adding that liability protection. So let's say the business gets sued, or it goes into debt, or you encounter some legal problems, and I hope not. But if it happens to be that case, at least you know that anything that you have in the business would just be the business. That's what they'll go after. And that your personal assets will be protected because you added that layer, that wall between the business and you. So for example, some of the personal assets that you'll protect, right, when you have this LLC set up is that you will not have your personal banking accounts, such as your checking and savings, exposed. If you have a car or a home under your name, they won't be able to touch that. Anything that you have, investments, if you have a brokerage account and you already have investments set up in there, at least just know that if you happen to get into legal problems, they will only go after the business and not your personal. So now, I'm sure you're probably wondering then, well, okay, well, then if the LLC is not going to provide any tax savings, then what's the point of that? Okay. Listen, the LLC, it can definitely become a really good tax strategy tool for you, but it has to be set up and done correctly. Because a lot of people think that with an LLC, you're going to have all these tax loopholes, and it's really not that case, okay? And one of the things that I also see, right, when they set up an LLC as well, because this is really important when you are filing as an S or C corp corporation, is that you have to make sure that you have agreements in place between yourself, the shareholders, any other partners that you may have within the business. That's really, really important because you're letting the government know that you have agreements in place for the business. And so if something were to happen, they have laid out the terms. Another thing that I see till this day is that they're mixing business and personal funding, okay? Or spending as well. And we got to make sure that we separate that as much as possible, because if you get audited and the IRS see that you are commingling both areas, then they're really going to scrutinize that return. And there are going to be a possibility that they may review those expenses and question those expenses and may even eliminate those expenses off of your return. And when they have that power to dictate whatever will be on your return, not only are you going to end up with a big tax liability, but there is a possibility that you may even be losing out your S or C corp election as well. So we got to be really, really careful with that and making sure that everything that you are doing and you are reporting meets the IRS standards. And it has to be, again, I tell people when it comes to expenses, they have to make sense because your numbers tell a story. And if the auditors that are reviewing your tax return see some inconsistencies or something that does not make sense, best believe they're going to go deeper into your return and start questioning you. And again, you don't want to give them any power to dictate what should be on your return. And this is why I tell people that when you are recording the transactions on your profit and loss statement or expense and income report, you have to make sure that it's done correctly, because another thing that I've seen as well is that poor bookkeeping. Because if your numbers are all over the place and the IRS sees this, they're definitely going to really take action against what you have input, and it's going to be really hard for you and difficult to even support your case, because if you don't have proper receipts to back it up or proper statements to back up these expenses or even the income that you are reporting, again, they're going to really dictate what's going to be on your return. And again, we want to make sure that we avoid that. Another thing that I also seen as well, especially when there are multiple partners or shareholders within the business, is that they are really there haven't been any like clear expectations. So we got to make sure that everyone's in alignment with what's going on and how the business should be set up. Because if the business is already disorganized, it's not going to be pretty, and it's definitely not going to help you out in the future if you end up getting audited as well. So some of the pitfalls that I have seen, especially with multi-members, right, is that a lot of them, believe it or not, is a lot of miscommunication or unclear expectations, okay? And it's usually not about taxes. It's usually because when they start the business, they don't discuss about what should be at play when it comes to the business. So for example, a lot of partners that I have seen don't even know how to split up the ownership percentage. Some folks will be like, oh, I do most of the work, so I should get 60%. But then the other partner's like, no, but I also do most of the work as well. And then so there's a conflict. So you got to make sure that if you have multiple people, despite either of their friends, their families, like, you got to have these conversations and make sure that it's laid out in the agreement when you are setting up the business, because there can be a lot of misunderstanding. And then obviously if it's conflicting information, that doesn't look good, especially when us professionals, when we're putting that together, the tax return, we got to make sure that we have the correct information, because the purpose of the income tax return is to report what happened or what occurred within the business. And if we are not providing accurate information on the tax return, that's going to cost you a lot, and it's going to result in penalties and interest from the IRS as well as the state as well, because there's a lot of states out there who have really strict requirements when it comes to the LLC, especially if there's multi-members on it. Another thing that I want to make sure that you guys keep in mind when you are in this phase is that you figure out who has the responsibilities, right? Who's making the decisions, how a profit's going to be split. And even having that really tough conversation if something were to happen, if someone leaves, like who's going to take over. So this is where I usually tell people, when it comes to these types of discussions or these matters, to definitely work with an attorney who really focus and specialize in legal formation and the agreements as well, because this is where they'll make sure they listen to, to all parties, and ensuring that when they put up this contract, that everyone is in alignment, because everyone's going to be signing off the dotted line at the end of the day. So I know for some folks, these conversations may be really difficult to have and uncomfortable at times, but just know that this will definitely help prevent some major problems down the line. And so I think just even having a strong agreement alone really protects that relationship and the business as well. All right, 1099 income strategy. So when you become self-employed, right? Taxes changes completely, okay? I know I did. When I first transitioned from being a W-2 employee, I was so used to taxes being automatically taken out by payroll. And when I transitioned to being a full-time entrepreneur, I had no idea that I was going to be responsible with my own withholding. And I want to let you know that the reason why you are responsible for your withholding, because you're your own business. You're your own HR, unfortunately. You're the owner, right? You're the employee. You're the customer service rep. You're everything. You're playing many roles right now under one hat. But this is where I tell people that when you are, going in through the entrepreneurship, just know that when you are generating enough profit or income, that you have to keep in mind that there are going to be taxes that you're going to be responsible for. And the two main taxes to keep in mind is, one is the income tax for federal and state. Unless you happen to reside in a state that don't do state income tax, then you're lucky. I know those from Texas and Florida and Tennessee, you guys don't have to worry about paying income taxes, at least on the state side. But for federal, yes, you still are responsible. At least you have one less tax to pay, right? The other tax to keep in mind is the self-employment tax. Now, the self-employment tax is pretty much, it's going to cover your Social Security and your Medicare contribution. And I think when you're starting off, I think the best habit to already do or already have where you're, earning the stage of your business venture is that you are setting aside a percentage of every payment you receive. Because the big mistake that I've seen even now, like I have several people who are already going through filing their tax return, despite, April 15th is over, a lot of people had extension. The reason is because they didn't set aside enough for the taxes that they are going to be responsible for. And this is where I tell people, listen, even though you have all of these expenses and you still have this left over, just know that that is not fully yours. So let me just bring in an example. So let's say you receive $2,000, okay? And I know for some people it's like way too much, but let's just use that as an example. Let's say you receive $2,000 payment from a client. That doesn't mean, right, that $2,000 that you have earned is available to spend the right way. You got to make sure that with that payment that you receive, it goes towards your expenses, right? Followed by federal taxes, state taxes, and self-employment taxes. And so this is where a lot of entrepreneurs become very blindsided because they spend the money first and not realizing later that they're going to owe like hundreds of $1,000s to the IRS and to the state. Now, I'm sure you guys are probably curious. Okay, so if you're telling me I got to set aside some money, how much should I be setting aside? I hear the most common one, save 10 to 35% for taxes. My rule, you should be saving 20 to 35% and putting it in a high yield savings account. You know why I did not say 10 or even 15%? Self-employment tax alone is already 15.3%. So 10% wasn't going to cover much of the self-employment tax. It may cover state taxes if you happen to reside in a state that, tax you at 10%. But I say 20 because 15.3% is already gone. Like that's going to self-employment. And then it could be between 2 to maybe up to 12, maybe 15% in state taxes or federal taxes. So again, this is where you got to make sure that you try to save as much as you can to cover that tax bill that may be coming your way. And I highly do recommend putting in a high yield savings account as well. It's because if you're going to be paying this on a quarterly basis, which I'll talk about in a moment, you're letting that money sit in a high yield savings account and you're letting it generate a little bit more. So that why not, right? If you're already putting it in a savings account that's giving you 2 to 3, maybe 4%, you might as well just try bank on that. Like take advantage of that opportunity while you're waiting to pay that next quarterly bill. Might as well let it sit in the bank account for a bit so that it can generate a little bit more. It may not be a lot, but it's something, right? All right, quarterly taxes. So just know that when it comes to the quarterly taxes, they have to be paid throughout the year. And the reason why is just because the government just mandated it. It's just a rule. It just has to be done. And this is where I encourage people that you make those quarterly estimated payments. And then I actually broke down the dates of when you should be making those payments. So that way, if you want, take a moment to take a screenshot of that. This is really important because when you are making these quarterly payments, right, you are reducing the penalties and interest for underpayment. They don't play when it comes to that. I know a lot of people, when it comes to like making their payment, they think, oh, but why is it that the IRS or the state is penalizing me for a tax bill when I thought taxes are due on April 15th? here's the thing. Taxes are supposed to be paid out throughout the year. So if you did not pay them out, let's say we're in 2026, and you waited to pay your 2026 bill on April 15, 2027, but they saw that you made no quarterly payments, they basically are saying like, well, you didn't follow the rules, especially as entrepreneurs. So you're going to be hit with the underpin of penalty because you're supposed to be responsible in calculating your own taxes, especially as a business owner. So I know a lot of people think like, well, that's not fair. Like, how am I supposed to know what I owe? And this is where you got to work with a tax professional who specializes in tax planning like myself. I use tax planning as a tool to figure out how much money you have generated, what your income and expenses were, and then look to see what your liability is. I calculate what your estimated tax bill will be for that quarter or for the year. I do a mid-year review, I do it at end of the year review, I do a forecast as well, because this helps you prepare you to see like what may come your way so that you can start saving now and also reduce the penalties and interest that may come your way. This also helps to avoid those tax bill surprises as well, because a lot of people, when they do their tax return, they're shocked. They're like, oh my God, I didn't know I had to owe like $13,000. A lot. Like, well, if you had met with me earlier, this could have been avoided, but it's okay because you're here now and we're going to make sure this is done and this is done correctly. And we get you into the habit of making those quarterly payments. There's a lot of professionals out there that don't do a lot of tax planning. But that's because it is a little bit time consuming and you have to know the laws in and out to make sure that it is done and analyzed correctly. And so this is why I always tell people, if you are generating a lot in your business and you need help, reach out to me, reach out to a professional who specializes in this so that they can help you and guide you and make sure that you are making these decisions. Me, myself, when I'm doing these analysis, when it comes to the tax planning, when I'm looking at all of your financial income that's coming in, I look to see like, okay, if this is your estimated tax liability, before we make any payment to the government, let's look to see what other areas in terms of deductions or credit you may be eligible for to help reduce this tax bill so that you don't have to pay all of this up front. I tend to be more conservative with my number. That's because I like to have cushion just in case, because there has happened time to time where I have business owners who have other financial activities such as investments or rental income, and they didn't tell me about it or they didn't disclose it to me until the following year. So again, I try to do my very, very best to ask all the questions when I can just to make sure that this is done correctly. But again, for entrepreneurs, we want to make sure that when you are making these quarterly payments, they are done correctly. And in terms of quarterly payments, I'm sure you guys are probably wondering, like, okay, well, if I have to set aside this amount, like, what can I do to help reduce this tax liability? Because again, I mentioned like there are some other areas, but I would say for entrepreneurs, the most common thing for sure to help reduce your tax bill is the deductions, which is pretty much your business expenses. So it could be like your home office, your phone, your internet, your software, subscriptions. If you hire contractors, those are another write-off. If you have been traveling, that's another opportunity for you. If you are someone who is, purchasing online courses or have to, take continuing education, or are just hiring professionals like myself to just help you and give you clarity, that is a business expense. And just keep in mind that expenses have to be ordinary, necessary that's relating to the business. Because if the IRS has even a sniff of a personal touch to any expenses, then that means that those expenses that you have occurred that have some personal touch to it may not be fully 100% deductible. But again, this is where I really do encourage you guys to work with a professional just to make sure that the deductions or the purchases that you have made are 100% deductible, so that you don't get caught off guard later on. All right. So for the businesses who typically, usually this happens, right? For mostly like the first years, right? First year one folks, is that when they're starting off this business, right? Most of the time they're at a loss. And so I'm sure you guys are probably wondering, if I have generated losses, how would this help me on the personal tax side? Well, it can help reduce your income level, meaning like the losses that you have will reduce your tax liability and likely boost up your tax refund, but it has to make sense and it has to be legit. Because the thing is that a lot of people tend to go too crazy with their write-off. And if I see a huge difference, let's say you made no income. Let's say you had made no income, but you had already came up with, I don't know, $13,000 in business expenses. Well, that means that we're gonna have to do this correctly, meaning that not the full $13,000 that you had to put up front is not gonna be fully deductible. We're gonna have to take a portion of that, allocate it correctly, and then the rest will be amortized, meaning like it'll be broken out in the next 10 to 15 years. So that way you can take the advantage of like those business losses in every year when time goes by. But again, this is where it has to make sense. This is where I also question as well as part of the due diligence part when I'm interviewing these entrepreneurs. I have to make sure that the cost that you have through the business makes sense. I know that it also has to, it depends also how you set up the business as well. Because I know a lot of folks, when they jump into forming the LLC, they go right away with the S Corp and they thought that with the losses, it is going to help reduce that income. But that is not really the case. When you file as an LLC, as an S Corp, you are limited with those losses. So again, this is where I really like to review that information even before the end of the year, just to make sure that you are aware of what's going on and what's at play when it comes to your tax return. So that way you're not thinking like, okay, I have, all these losses, so I should not owe anything. But just know that the losses, there are going to be some limitations. And then again, how it's set up, there might be some restrictions that we have to consider when we are putting together the income tax return. Also, just know that as well, that the IRS, when they are reviewing this information, especially if the business is showing such a significant loss, right? Especially in the first 3 years for sure, they have to look to see whether or not the business was really intending to make a profit. Because if the IRS believes that you're just taking advantage of, as an entrepreneur, these business losses, but when they dig deeper and they see that the business activity just seems off, then they're going to reclassify that business activity as a hobby. And then those deductions can either be limited or eliminated completely. So this is where we have to be very, very careful on what you do, especially when it comes to for first years for sure. Like, I know a lot of people tend to go crazy when it comes to, building up the business and spending heavily on it. I think it's really best that you work with a professional who's just going to give you good clarity, because at the end of the day, right, as a business, you want to make sure that you are making money and that you are profitable, especially if this is something that you're going to be doing long term. Now, for my startup founders, I didn't forget about you guys, right? When you guys set up the business, we got to make sure, right, that the people within the business, they are going to be receiving some type of equity compensation, right? Because with startup, you're going to be investing heavily, but the future idea is to be profitable and to generate a significant amount in revenue, and as well as making sure that you are providing shareholders who are going to be part of this company. We got to make sure that there are opportunities for them and that they're not being hit with any tax implication that might cost them a lot more than usual. So some of the things that when it comes to the startup, we just got to look at how many people are going to be in it, how many are going to be involved, what are their percentage in the company, right? What are some of the things that you are hoping to give to them in the future so that they can continue on helping build up this business? And if they're going to be investors, obviously you're going to continue to ask for additional investments from them. So we got to make sure, like, what's their stake? What are they going to get at the end if they're going to continue to invest into the startup? So those are the things, some of the things that you have to keep in mind. And also, again, this is where I really would suggest that you work with an attorney just so that you lay out the terms and any type of agreement that you may have. But I will say that one of the major things that I've seen with startup founders, right, is that they typically tend to skip the particular election, which is the 83B. And this has to be done on time. So, you know how with LLCs, you have to file for an S or C corp election. So for startup founders, right, filing for the 83B is going to really, really help, because the thing is that when the company, right, when they're starting brand new, the shares that that they create or they have, it's going to be worth very, very little. So this is where I say, if the shares, like, stocks, options that you have, vesting, anything that's in relations of you trying to give this out to future shareholders, if you file for this election, the taxes that you pay are going to be a lot less because the share is worth very, very little. But when the business is growing, then that means that it's becoming very successful. The shares then increases. And this is where we got to make sure that with this election, this help reduce your tax liability that may come your way for your partners or shareholders who are going to be involved in the business. There's a lot more into it, that a lot of technicalities too, but I won't go over it too much because it's going to be a little bit more complex. But if you guys are interested in learning more in depth about that, definitely let me know, and I can definitely put another session for this for the startup side. But I will say that when it comes to you guys starting off with this startup phase, is to make sure that you file all the paperwork correctly, especially with the 83B election. We want to make sure that we're taking advantage while the shares are very low in value, because when they're very low in value, then you pay a little bit in taxes. But as the business grows, obviously the value of the share will increase, but at least you know that you helped your shareholders and yourself as well avoid the significant tax bill that may come your way if you happen to have filed this very late in the later in the phase of your business, and now the business is growing. And so I always tell people, like, if you can take advantage of how low it is, pay those little taxes, because it's going to help out in the long run. For the investment properties and figuring out whether you should be putting up those property into an LLC. And I get this a lot, actually. It's very common. And I know that a lot of people are looking to expand their financial portfolio. I always tell people when they ask me, should I be putting this property into an LLC? I always say it really depends. Because again, remember, an LLC only provides a protection for the business, but it does not automatically reduce taxes. When I say it depends, it really, really goes down to your mortgage company, the insurance carrier that you are with, and then obviously following state compliance as well. So, for example, if you are wondering if you should be putting up, your property in an LLC, you got to look into whether or not the mortgage will allow, like the lender will allow you to do so. Because I know a lot of lenders nowadays, they don't want the property itself to be transferred into the LLC without approval. Because if you do it behind their backs, then you're pretty much violating the mortgage agreement, and that will get you in legal trouble. So you always make sure you double check with your lender to see if this is even something that you can do. And if so, then just make sure you have things in writing, because again, you don't want to get them, you don't want to get into legal trouble with them, especially with these lenders. A lot of them they have the financials mean to take you to court if necessary. And if you don't, then it's not really worth it. Another thing as well that you have to keep in mind is that, let's say you do get approved, right? From the lender to transfer your property into an LLC. Then you have to let the insurance carrier know that there has been a change of ownership, because now the property, which used to be under your name, now has to be under the business. And so you got to let them know that there has been a change. Otherwise, if God forbid something happens where you have to reach out to your carrier for some support because something happened to the property and they end up finding out that you did not let them know of the change, they may not be able to cover you. So you want to, again, I think having that proper protection is very needed, especially when it comes to property, because God forbid something happen. Mother Nature sometimes can be very interesting. So another thing to keep in mind as well is the legal costs, right? Because when you already have set up an LLC, you got to consider the fact that there's going to be a formation fee, an annual state filing fee, and then you're probably going to have to hire an attorney as well as an accountant or a tax professional to make sure that they can, help assist you with the paperwork because it adds up. It adds up a lot. Um, Another thing as well to keep in mind is the compliance side. It's really, really important that you are following the rules, especially as an LLC. Because if you don't file your annual report that you're supposed to, if you're not separating your personal and your business, or if you don't have proper clean bookkeeping, it's just going to set up for you for a disaster. So I always tell people that when you're looking into all of this, just make sure that before you even consider transferring the property to an LLC, just evaluate the full picture. And don't believe in the hype again, because again, I see a lot of social media stuff that is encouraging folks to go ahead and make this change, but you got to make sure that it makes sense for you, especially because not everyone is the same, right? You got to make sure that your lender is going to approve it. You got to make sure your carriers are going to be okay with it. And you got to make sure if you have the financial means to keep up because it's going to add up. It becomes very, very expensive. All righty. For my ITIN holders, I love this topic because I love working with my ITIN folks. A lot of folks believe that when they're starting a business, you have to have a social security number. And that is not the case. You can start a business without a social security number. A lot of bank institutions nowadays, as long as you have a tax ID or an identification tax ID number, you can start a business. You can open up a bank account. You can file your tax return. You can also apply for an employment identification number for the business. You can even register for an LLC within your state because what they want to see, the IRS and the state, they just want to see that you are in compliance and that you are organized and that you are understanding like what you're supposed to be doing, especially as an entrepreneur. So whether you have a social security or ITIN, they just want to let you know, like, no matter what, like you still got to follow the rules and that you're doing things correctly and that you are having somebody to help you make sure that you are set up for success. Because again, entrepreneurship, it has so much opportunity. And for ITIN holders, I would say take advantage of this while you can, because I know it is really hard, especially with the current job market. It can be really, really tough to get a job, especially something that you want to do. But if you have the tools, if you're really good at what you're doing, if you have the skills, why not use that opportunity and create a business out of it? There is so much there's just so much for you that you can do, and especially because there is over 1 million people here, especially in the United States, who are willing to hire you and to support you all the way, regardless of your status. Because if they really, really value the work that you do and they really value your skill, like take advantage of that while you can. Me myself, I left corporate America because there was a lot of reasons, but majority of them was freedom. I really wanted freedom to do what I want and under my term. And so for me to just step away from corporate America to become an entrepreneur, it's the best decision I ever made. And that's all because the relationship that I had built with the people and the way that they value me and my expertise and supporting my cause, like I'm just so incredibly grateful for them. And especially because a lot of them are item holders, a lot of them are undocumented students who are just so thankful that they have me and they found me to help them and just encourage them to keep going, motivate them. And that's what a lot of folks need. I mean, I'm just saying this in general. I think a lot of people, not just ITIN holders, I think everyone generally just really do need that support system. And so if you are interested in learning how you can work with me, I encourage you guys to just reach out. I do offer a free consultation as well. So I definitely would love to learn more about your situation and how I can help you out because I want to make sure that you are set up for success and that you have things set up correctly. Because again, I've seen the messiness of a lot of people doing it themselves or hiring third parties or hiring other tax professionals and they're not doing it correctly or they're doing something really, really shady that could put them at risk that can lead to an audit. I am trying my very best to help many people I can to avoid those steps and those mistakes. So just to kind of like wrap everything up, I just want to let you guys know that as entrepreneurs, we got to make sure that you have everything set up, especially with the business formation. You have proper bookkeeping. You are not mixing business and personal. And if you are, it is not too late to change that. Okay. It is not too late to change that and fix that. I encourage you guys as well to start saving aside. If you are building a business and you are profitable, definitely start setting aside and put it in a savings account so that you are ready to fully prepare to pay the tax bill that may be coming your way. And yeah, and to end it, just don't wait. Don't wait too long to be asking questions. If you have a professional that is kind of lacking with the communication or hasn't been giving you any clarity or any guidance, please just, I'm more than happy to help you out. I encourage you to just reach out and get a second opinion. You just never know. It might end up working out that you really, really enjoy what I have, done, and you really would like to have that right hand person, the right strategic partner right by your side just to help you throughout your journey as an entrepreneur. But with that being said, I definitely want to just thank you all for your time. I know that it's an hour went by real, real quick, but I definitely want to give everyone an opportunity to ask me questions. So I'm going to go ahead and stop sharing my screen. Or I think, is there anything else at the end? No, I think that's it. Okay, so I'm going to go ahead and stop sharing the screen so that I can see the lovely folks in their faces. Oh, there you guys are. Okay.
All right. I already have two questions. I mean, we've been having a little party on the side in the chat, which has been
Oh,
fun. Um, and I have two questions, and then we can pull from some of the other ones as well.
go right ahead.
So someone wanted to know, should you find a tax professional that is state specific or industry specific?
Oh, that is a great question.
I know. I know the answer to that one. Let's see.
I would say definitely have that conversation. I encourage people, if professionals already offer like a free consultation, just vet them out and see how knowledgeable they are, especially if you are more, because you want to know, like, do I need somebody who specializes in this industry or in this state? I also work with therapists, so they are very specific, especially those in California and Texas. They need to know, like, okay, I need to find somebody who understands the industry, but also understand California tax law because they have stricter rules for private therapists in California. Same thing in Texas as well. Like, I'm not sure if you guys are therapists here, but for those in California, you can't even set up an LLC. You have to file as a sole proprietor. However, that can change depending on your business activity. But again, this is where that professional really need to understand that law. But to answer your question, I guess it really depends. And this is where I encourage you to vet out that professional. I myself, I specialize in California, New York, Texas, Nevada, Florida, but mostly California because they have really, really strict rules just in general for everyone in the industry, especially LLCs because there's just a lot of filing requirement. New York is another one as well. But I would say it depends. Yeah. Really vet them
So
out.
Melina added a little context. She says, my business is agriculture and professional services in Colorado. Melina, I don't know if you are doing cannabis. I just have this
No,
thought that
just
maybe it
general
is.
like animal products and plants and stuff like that. But since it's like Colorado has a lot of environmental rules and
Mhm.
regulations, and I'm
Exactly.
also like a financial professional in Colorado, so keeping my finances straight impacts both my W-2 and my business. But if the
Hmm.
goal is to scale up to do like, oh, shipping, animal products out of state and like keeping track of
Hmm.
like different vendors or stuff like that.
So I'll share a thought, and then Sonia, you tell us what you think. Um, there's I'm gonna call it the manufacturing, and then there's the selling.
Mhm.
Because you are making in Colorado, you want to make sure that your tax professional understands that. Your sales, you might be able, depending on the system that you use, something like Shopify, for example, will be able to set up whatever tax collection, depending on the state, where the transaction happens. But if you're selling online from Colorado, you might not need a lot of variety of services there. It might all work out because it's one location. So,
I like I would like to add, if you're only selling in Colorado, then that's fine. But if you happen to sell outside of the state, this is where the Nexus rule kicks in. We got to make sure that you don't get in trouble with other states, because if they end up finding out that you are selling a product and you don't have a sales certificate, aka permission to sell in other state, they will hit you with that penalty for failing to register for that sales tax. So myself, my team, and I, what we do before we even onboard any taxpayer, we look into the industry and then we look into their rules and see if that's something that we can manage. If we cannot manage, we can connect you with another professional who may be able to assist you in that manner. But we typically I like to take that challenge and go ahead and start doing all the research to make sure that I'm able to assist somebody. But if I can, I'm very transparent about it too. I'm very honest. If I can't handle it, I will offer to connect you with someone else, and then you can vet out that person. You are not you don't have to be forced to like sign up with them right away. At least have that conversation, just making sure that it's the right professional for you to work with.
um, another question was, hold on, because it was earlier on, and I don't want to forget our early askers. How long can excess write-off be amortized for?
Can you repeat that question?
How long can excess write-off be amortized for?
Excess?
Yes, like excess, like
Oh,
I
okay. If I'm understanding the question correctly, is how much? Um, so there's
I wasn't clear on the question. If the person is still on the call, you can feel
mhm,
free to add some context. I didn't understand it either, which is why
yeah,
I
is the individual here?
I don't know. I think that they're trying to figure out, can you write something off over a period of time?
So it depends. So if it's like a depreciated asset,
Asset.
then those get broken out, and it depends the type of property or asset it is. So for example, if it's a vehicle, let's say you purchase a vehicle, that gets broken out in 5 years. If you purchase a machinery, it can be broken up to 15 years, depending on the type of machinery. Can it be amortized? Well, it really depends. Like if you purchase all of this in your first year, then yes, this is where we'll have to apply that rule, because technically we're not supposed to take a full chunk up front. Especially if you did not generate any revenue. That just is not gonna fly with the IRS. They're gonna pretty much tell you gotta fix this, because this is not how it works. But I'll definitely, if that person can provide us more content, that would be great. So that way I can give them the appropriate answer. But I think for now, if they're asking about like depreciated assets, it really depends on the type of property or assets and how many years. It's a case. Yeah, we have to look at what's presented to us to classify it correctly on the tax return.
Someone wanted to know about how are shares appraised?
Oh, that's a good
Yeah,
question. So it
firm
really,
valuation. Have
yeah,
at it.
It really, really depends. We have to look at um definitely we have to look at the year and how much this is kind of where financial planning comes into play. So it really, really depends, but I will get back to you with that so I can give you a real clear answer.
Mhm.
But I know that the financial advisors they would probably ask additional questions just to make sure when they are evaluating that information to ensure like what it will be appraised for. But yeah, I have to look through that. We appraise shares through a 409A evaluation. I'm not too familiar with the 409A, but I'll get back to you. I am interested about that one. Um, yes.
Yeah, and Isaac is in the house. Isaac is one of our board members as well, who is an entrepreneur, and are you on your Series A? No, you haven't gone public. Maybe you did. I'm not sure. But he has a wealth of knowledge in this area. What I can tell you is that there's different things that go into valuing a firm before the initial public offering and then after the initial public offering. So there's an understanding of the forecasted growth of a company, and then you do a return on investment, and it brings you back to the present net value, and it's a whole mathematical formula to figure out um what a company is worth today before it has gone public. After it goes public, right? And you're looking at the tickers in the market and you're kind of deciding how do you know a company is going to do well in the future so that you can invest in it? Then that's a whole different ball of wax. Um, and yeah, it's I would say it's a mix of an art and a science.
Yeah, I'm looking at this right now. I know the IRS, they do have rules, but pretty much it cannot, for sure, they're stating that it cannot be issued below fair market value. But that's the thing. What is the fair market value? And this is where a little of
Hmm.
and this has to fall under some financial planning side to just make that determination. Um, but I'm gonna dig deeper into this and I'll definitely, I know right now there are providers. The most popular one is Carta, JP Morgan. So this is interesting. I gotta look into this.
Yeah, it's about capitalization. So Isaac is talking about they do their 409 evaluation through Carta, where they keep their cap table. Cap is capitalization. So
Right.
yeah, people want to check capitalization, firm valuation, all of that terminology, and it'll take you into a fun rabbit hole.
I don't mind that.
Yeah.
As tax professional, we're very analytic
Yes. Oh, you're
professional.
in good
So,
company. You are
so
in good company.
I'll definitely
Um,
get back to you, Isaac, because you got me intrigued now by this topic. So yeah, I'm gonna look into it. And I'll probably if I find some really good resources, I'd be more than happy to share that to you guys. Hopefully by next week, so that they have this
yeah,
information. Perfect.
for sure. Um, let's see. One more question that I saw here that I think it's important. Um, I'm gonna put a spin on the question. The question was, what should you do for taxes if the company that hired your services didn't give you a 1099 and you're filing as a sole proprietor?
Oh,
So I want to put a spin on that.
okay.
Okay. Because if they don't give you a 1099, then you should get your 1099, call them or whatever. However, there are situations where you don't need a 1099 if it's a certain threshold in income or the type of company that has hired you or the type of company that you are. So could you provide a little more clarity around who issues a 1099? When do you not get a 1099, etc.?
Okay. So a 1099, the minimum threshold is if you have earned $600 for a service vendor by that company or by that institution that hire you, legally they are supposed to issue a 1099. If you did not earn $600 or more and you're below that, they are not obligated to issue a 1099. However, by law, if you still got paid though, any earned income that you had made, especially for the business, it has to be reported in your tax return. You can't hide that, okay? Second, if you have filled out what's called a Form W-9, that is where you'll let that third party know, hey, here is my tax information. This is for your record in case you have to issue me a 1099. If you are a sole proprietorship, and you get a 1099, that's great. But, or an LLC, right? But if you are an LLC tax as an S or C corp, then that company who hire you for that service render, they're not obligated to issue you a 1099. However, you are supposed to still report that on your corporate tax return. And the reason why is it that way is just this is how the IRS set up the rules. But the rules is pretty much holding you accountable. The IRS is holding you accountable to still report that income on your return. If I will say this too, if you also collect a payment that was ACH or Zelle, technically they're supposed to issue you a 1099 NEC. But if you use a third-party credit card platform or PayPal, for example, as well. So let's say Stripe, Square, PayPal, those companies are supposed to issue you a 1099K, but you gotta let that institution or vendor, whoever hired you for that service, you gotta let them know, hey, you cannot issue me a 1099 because you're making payment through using a credit card or a debit card. That company is going to issue me a 1099. And the reason is that if that institution or vendor issue you a 1099 NEC and you get a 1099 from PayPal or Stripe, you're reporting duplicate income, and that's going to impact you on the tax side. So you got to make sure that you have that conversation up front and you let them know. If they still ask you for a W-9 and they're still paying you through a third-party platform, this is where professionals should really help you and advocate for you and educate them. Or even they're professional, but again, not a lot of professionals do that. They're just like, no, they still got to get a 1099. Like they got to give us a W-9, but this is where you got to educate them. And this is where I also help my entrepreneurs because I get that a lot. A lot of requests were like, hey, this institution is so adamant that I fill out a W-9, but then this is where I can educate them and like, hey, by law, because you're paying this person using a credit card, you can't issue them legally a 1099 because they're already going to get a 1099 from that third party. And this is going to impact them because they're going to report duplicate income. If they still do it anyways, right? If they still do it, or let's say you messed up and you just like, oh, I just got to fill this out and you didn't know. Well, we can always back that out on the tax return, but we just have to provide an explanation on the return. But this is where, again, you got to let your professional know, like, hey, these are duplicate income. So the professionals got to do their job to make sure, like, to know on the tax return, hey, they got two 1099s for the same amount, but they're duplicates. And you should not be penalized. But if you still end up getting questioned by the IRS, you have all the proof anyways to say like, yeah, here's my Stripe report. They paid me through this. It was just an error. And that's it. It's fixable. But again, have those conversations where you're professional. And if you're not getting help, I think you should reconsider hiring someone else to assist you with that matter. Oh, I think Francesca, you're muted.
Sorry, I was muted. What are good resources to help you know which state or locale to base a startup out of for tax purposes based on what you were trying to do?
Oh, what good resources. I gotta look some up. I know this one's a great start. This organization's a great start to get that information, but I'll definitely find a few things. I'll let those links, those resources out, and then I'll be more than happy to provide that information for you. But can I ask you, are you asking for a specific state or you're just looking for something in general? I think this is for Anthony, right? Yeah.
Okay, can you hear me?
Yes.
Looking based off of one, my geographic area, and because I don't want to have to, move across the United States if I
Hmm.
have to, or, what options are available, but also like maybe, what different tax laws are in certain areas so I know where to create certain things when the time comes.
Okay. All right. I'll find something that just kind of give like a general overview. And if you if there is a specific state that I know there's a little bit more complex, I will call that out so that way you know. But I do know in terms of like start off with the business. I know Delaware for sure is very friendly with that. When it comes to privacy, I know Wyoming and Nevada is a good state to also do, but it really depends as well, the nature of the business and what you're doing. But I'll definitely find some resources and get back to you. So like you have like just at least a general information, in terms of like operations and setup and what to look out for. And then if there is a specific state that anyone's is interested, please let me know. I can definitely give you more detailed info on that one as well.
And Sonia can, there you go. Susan has listed a resource as well. I was going to say Sonia can cover her ears, but this is where AI can also help. Um, Sometimes if you put in the specifics, AI might be able to share some alternatives, at least narrow things down to give you a starting point.
Yeah. Be careful. Yeah, I definitely say
Be
AI for sure is a
careful.
good starting point. But definitely
Starting
when it
point.
comes to the tax implication side, yeah, be very careful because even myself, I catch mistakes. I'm like, wait a minute, what does this
Yeah.
mean? I will argue back and forth with AI. Like,
Yeah.
but no, that makes no wait, how? No, that makes no sense. Anyways, I
Yes.
digress.
Um, People aren't asking about it, but it might be that they don't have enough experience with it. And um, I think it's important to talk about inventory.
Mm.
So, for people who have inventory or carry inventory, what are some tax considerations?
Oh, definitely make sure that every year, like the starting year and the ending year, you know how many products you have. Like keep track of the product for like January 1st and then again towards December 31st because that's going to be needed on the tax return because the IRS want to know like, okay, well, how much inventory you have from the beginning to the end of the year because that information gets rolled over every year. And if some numbers don't tie back to prior year information, then that is where they're going to consider you not being organized with your paperwork and something is off or you're trying to hide certain information. And of course, if they even sniff any type of you trying to be out of compliance, it's going to lead to a potential audit. And again, the audit process is horrendous. And you don't want to give them any power to dictate what should and shouldn't be on your tax return. So just make sure you're tracking everything in and out. I know it can be tedious. I know sometimes people forget and they just, especially for those who sell like physical products, especially during the holidays, like Yeah, just make sure that you're just keeping track of that information. Also, as well for the bookkeeping aspect, right? Um, I highly recommend that you break out your cost of goods sold, meaning like, okay, these items were materials and supplies. These were contractors that I had to hire to put together these items. Um, Shipping, that's another one. Like, so I would recommend that you be as descriptive or specific as you can on your bookkeeping record. It's just gonna make it easier for me as well. Because it allows me to pretty much review the numbers and then make sure that it makes sense on the tax return. If there's something that's off, at least I will question it and ask for clarity before I enter it on the return. Because again, I'm just trying to prepare that taxpayer for the possibility that you may be questioned by the IRS, but at least we have all the paperwork and we have the bookkeeping records and that it was broken down in details because honestly, the IRS, if they see that you're very thorough and organized, they're gonna move on to the next person who isn't. So you kind of, I always tell people the first 5 seconds, a 5 second rule. If they see something out, oh, they're gonna start. But if they see something that looks good, they're gonna move on. That's how they are because they are seeing so many returns. They just gotta keep it going. They gotta keep it going. They want it off their desk too. So, but again, make sure you work with a professional who's going to help you get all of your paperwork organized and making sure your bookkeeping is done correctly. And I see a lot of fishy bookkeeping records that I'm like, what are they doing? But again, I know
Vivian. Yeah,
not.
Vivian, go ahead.
Um,
Ask your question.
okay, so quick question. I am gonna have to do a consultation because I like what you said. If they're not being so informative, that we need to do something right, like to understand, right? But my question was, me and my husband opened the LLC last year in 2025. He takes forever to do everything, doesn't listen. So we try to open the bank account in 2026, and they told us that we had to double check, but that I know of, we filed, we went through somebody, did everything correctly. So whenever we haven't done our 2025 taxes yet, but we did file the extension. But I guess what I'm asking is, we kind of have everything in order. I mean, we could be definitely way more organized, like you said. Um, I guess whenever we go to file, we needed like the lady that we hired, she told us that we have to report it that we opened the LLC even though we didn't use it.
That is correct. So even if you had no activity on the LLC, you still
Mm-hmm.
are required to still file an annual report with the state. And
Annual, okay.
yeah,
And we're in
and then
Texas.
yeah, Texas is very strict with that. So make
Okay.
sure that they usually will send out reminder emails, but this is the problem when you do hire third party folks, especially like Biz Inc. Legals, is it
Well, it's
legals?
like our tax lady. I don't know if I mean, I guess it would be third party, right? Because they
Yeah.
filed it for us.
Even
But we,
yeah. Even some tax professionals, they're not transparent what they do and they don't give
right,
you access. And
right.
I myself, when I set up business entity, I give you guys access to that information, especially the login with the state. Everything will go through you. Obviously, I'll be CC'd on those emails. I'll get copies of those as well. But
Mm,
it's really important that you as business owners, you have control of your paperwork.
yeah,
You can't
exactly.
and that's why I said be very careful who you work with or even third parties. Just make sure that they give you some sort of access. So just in case if they forgot to file something, because this happens a lot with third parties, they forget to file the annual report. Or they didn't provide you an EIN, but you're like, wait, but how did you set up this
And I
business
get,
formation?
and I guess
Where's my
I'm
tax at?
confused because we did get the tax ID, but it's like, how are we not able to open the account if we have, if we got the paperwork and the letter? You know what I mean? And I have access to my login. I created it for the
Public
state or like, yeah.
information, so you
Mm.
can go in and retrieve it.
But
But I know there are some states that are limited from that. So
oh.
Yeah, I
Okay. I'm
know.
just kind of scared to call because I don't want them to trigger a rabbit hole.
No, you can always say, and I always tell people when you're asking questions, you're like, "Hey, I'm just trying to obtain my paperwork. I want to make sure that I'm in compliance." As long as they hear the word compliance, they're like, "Okay, she just want to make sure she did it right." Uh, they're not gonna,
Uh,
you're not gonna get in trouble. You just let them know. I'm just trying to get all this stuff sorted out so
okay,
I
so
can be in the
I will
thing.
start there, find out if it's filed correctly, because it should be. I have the letter and the paperwork. But what tripped me out was whenever I went to the bank account, they're like, no, you can't open it. We're like, okay, so
Here's interesting thing that you brought up because bank will
mm-hmm,
look up your information through the Secretary of State website. If they
right.
see that it's not in good standing or not registered,
No, sir.
yep,
And
they won't.
see,
Oh,
okay, and see, we never, like I said, we never actually filed or did anything on it, and we do have a letter with the ID number, so that's why I was like, I guess maybe the paperwork, something's, I have to double check it, and then I would book the consultation.
yeah, go ahead. Yes,
Okay, I appreciate it. Thank you.
yeah, no worries.
Okay. Thank you, Vivian. Next
Thank you,
question,
guys.
and I think it'll be the last question. Um, Subcontracting internationally. Do you issue a 1099?
Oh, good question. So it depends. I know a lot of these international folks, um, they don't want to get a tax form. You're supposed to legally, but you can pretty much still write it off and just classify it as outside services. And then if you happen to, let's say the IRS questions about it, like, well, why didn't you have them file? I forgot the form. It's an international form for sure. There's a lot of folks that just don't want to file it. So you can just say he or she just refuses to sign it or fill it out for me. But I have records. As long as you have receipts showing proof of payments to those contractors, you should be good with those. Just make sure you save that information and then you classify it as outside services. So that way they know, like, okay, because it's becoming more common nowadays now. So they are being more lenient when it comes to that particular expense. And if you hire like Fiverr or Upwork and they're internationals, just know that Fiverr, I think that's how you say it, and then Upwork, they're the ones who are going to issue them some sort of tax form at the end of the day. That's their responsibility, not you, because you're paying most of the time with a credit card, right? So similar to how you're getting paid with a credit card from another account and that company's going to issue you a 1099 or Stripe Square or PayPal issues you a 1099. Same thing with Fiverr. They're going to issue those folks some sort of tax form. It may not be a 1099 for those international folks, but it is some sort of tax form because they have to provide them all that information legally to uh, make sure that they're in compliance.
Okay. Anthony, give me 1 second to give you the information before we officially say goodbye.
Yeah,
I know that you will get also a copy or a link to a replay
for
for
sure. I know
this.
that you guys have been giving
Oh,
out my
there you go.
website, but I'm also going to give you guys this actual link. Um, Usually, some people I know for intakes, it only takes about 30 seconds for you guys to fill out intake. But if you guys just want to make a call right away, I'm also going to share this link right now, which is the 15-minute assessment call. And I'll share this with the lovely ladies as well, so that they also have it on the for the email for the folks. Go ahead, just schedule in. I will say I think I have a few more openings next week, but for sure we'll be fully open again for July. I mean, for June, not July, June. Because I got real busy. I appreciate everyone who's reaching out and wanted to work with me. Because I know this stuff is very intimidating. And I know a lot of my colleagues, they're not the greatest when it comes to relaying this information. And I know a lot of them are a lot more serious, so that can intimidate you guys more than anything as well for asking more questions. But for me, I'm an open book. I'm very friendly. I know this stuff. I went through tax school for you guys, quite honestly, because holy crap, there has been many times that I wanted to just drop out because the professors were very dry, let's say. But I had a great mentor who helped me throughout that whole experience. And honestly, as I continued to learn, I'm like, why is it that they had to take about a whole hour to explain one question when as honestly could have been said in like two sentences? Same thing with those notices you probably receive from the IRS. They give you like 3 to 5 pages and it's like, oh, they just want this. Like, well, why couldn't they just say that? It's just a scare tactic, quite honestly. That's how I see things. But don't worry, I got you guys back. When it comes to these tax problems, most of the time they're fixable. Okay, so don't worry. I will tell you if they're not. I'll be very honest about that part. Anyways, any more questions, or are we good here? Oh, Francesca, I think you're muted again.
I know I keep doing the mute unmute game. Thank you so much, Sonia, for your time, for answering the questions. Thank you for everybody that brought their A game and participated. You get out of this what you put in. So thank you for asking because that's how we all get to learn. Sonia, I am excited to see how you help our community moving forward. So, yeah, group hug and good night, everyone.